What's up everyone, it's Cathie with Money Investing. So in this video, I wanted to break down exactly what Cathie Wood said during her most recent interview with respect to the banking crisis. We've got Bitcoin and we've also got innovation and technology, and there was some really critical information revealed during that interview as well, which I will be going over in this video. As always, if you enjoy it, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel, hit that notification bell so you don't miss out on any future market updates and videos and live streams. We will be live to cover the Fed and the FOMC meeting tomorrow at 2 and 2:30 p.m. Eastern. So link's going to be down below for our Discord and Patreon as well. Consider supporting, and there is a 16% annual discount available till the end of this month. So first things first, banking crisis. She talks about how banks still have some type of a solvency risk, even though the liquidity risk might be gone because the Federal Reserve and the FDIC and the Treasury Department are providing support in terms of injecting money into the economy and providing a deposit base for all these banks. There is still a solvency issue, and for the reason for that is actually quite interesting because, again, we were kind of overlooking that, so I would definitely give credit for Cathie Wood here, because if you take a look at the held to maturity asset base for a lot of these banks, they're yielding less than 2%, right? So originally 2 years ago, when these companies invested their money into treasury bonds, mortgage-backed securities, commercial bonds, all those things, they are now yielding lower returns. Why? Because interest rates 2 years ago were a lot lower. And now they are borrowing from the Fed using the discount window or the Bank Term Funding Program at a discount rate of 4.37%. That's the discount rate, or close to 4.3, 4.5% is the discount rate. So the banks right now are pretty much generating a net interest loss as opposed to a net interest income. So their business model is completely flipped. Now, one thing that Cathie Wood did not talk about, which I'm adding here, is the fact that the Federal Reserve is issuing these loans, or pretty much offering these banks these loans at face value, not market value. So the banks could simply not pay, and their bonds and their collateral will be redeemable by the Fed at a loss because their market value is actually a lot lower than what these face values are. So they can kind of get by with this, but right now their cost of borrowing is a lot higher than what they're yielding on their assets at the moment. So not only do we have a liquidity problem, but we also could have a solvency problem if this continues for too long. So Cathie Wood also talks about Bitcoin and saying that Bitcoin was a flight to safety in March, and we have seen a lot of outperformance from Bitcoin and Ethereum and cryptos in general. She again reaffirms that innovation solves problems, and as liquidity dries out in a crisis, there will be a more flight to quality towards Bitcoin and the likes. And company treasuries, so a lot of companies and their treasury departments were very much investing in Bitcoin at the time. We had a lot of companies put Bitcoin on their balance sheet, but regulators started to pull them back away from those, and there will be more institutional inflows. So I will go over some screenshots where Cathie Wood does have a base case, bull case, and a bear case price target on Bitcoin. That was part of that press conference here very, very soon. Just give me a minute, I'll go over that. But she is expecting somewhere between 2.5% to 6.5% demand from institutional investors, and regulators, she says, make absolutely no sense when they don't want to add a Bitcoin spot ETF. We do have a Bitcoin's futures ETF, but not a spot ETF at the moment. And when talked about her individual funds, she mentions that they lowered the names of the flagship funds in terms of how many holdings they have, down from 58, which was back in 2021, to now sitting at 27 to 28 holdings in their flagship ETFs. So they've consolidated and concentrated their portfolios into some of their highest conviction names, as opposed to some of the more traditional funds that are going to diversify in the eyes of risk, in the eyes of uncertainty and fear. As traditional investors diversify, ARK Invest is consolidating and concentrating more towards their highest conviction names. The critical information I'm not going to go over. I'm going to actually play the clip and for you guys to listen to. But she also mentioned that we are the closest to a venture capital fund in the public markets, and our companies are going to disrupt the traditional world order, and there is some serious deflation happening in the economy, with price cuts also happening with the likes of Tesla and a lot of other companies also cutting prices. This right here was the price target from ARK. Again, 2030 price target. Bull case is over 1.4, almost 1.5 million dollars, with a base case of $682,000 and a bear case of $258,000, which is just 10x from right now. Even the bear case is 10x from where Bitcoin is at the moment. These obviously are going to be some of the top holdings. So Tesla and Zoom and Roku, Coinbase, Block, UiPath, Shopify, Teladoc are some of the top holdings for ARK Innovation ETFs. And these are some of the returns year to date. Obviously, ARK doing really well, up 22% as the markets have been very much risk on. And we have seen technology do a lot better. But of course, on a 2-year basis, absolutely getting destroyed on that sense, compared to the S&P. And this is the 3-year performance, also lower than the S&P and the Nasdaq, but on a year-to-date basis, still doing, of course, a lot better as we have seen a lot of risk-on environment. Now, this right here was a poll from Bloomberg Technology. Is Bitcoin a must-have? And these are the results. 26% people saying that yes in a bank crisis. 39% says no, too volatile, and 34% mentioned buy gold. These are the results of Bitcoin's sentiment, and of course, how according to this poll. Now, I wanted to play this clip, and I want you to hear very closely because Cathie Wood and ARK Invest are currently holding on to a $2 billion loss, which Cathie Wood said that can be utilized for future capital gains. In other words, it's going to help them offset future capital gains. But $2 billion is that number. I want you to listen to this.
Well, the premise of the question is that we're an asset allocator. We are not. We invest exclusively in disruptive innovation, nothing else. What we did do was we concentrated our flagship strategy, so ARKK and our other strategies, ARKQ, ARKW, ARKF, and we moved in the flagship's case from 58 names in February of 21 when we peaked down to 27, 28 names. We have a scoring system, and the scoring system is based on variables we believe are very important to innovation. And so we concentrated the portfolio. Many people in the traditional asset management world, when they go through a risk-off period, they will diversify their portfolios by moving closer to their benchmarks. What they're doing is typically selling our kinds of names. Yeah. And so that is why they're putting extreme pressure on them. We'll create losses by selling stocks, and that gives us a tax loss asset, which we have. It's over $2 billion right now, against which we can take future gains, and then concentrate towards our highest conviction names. We have a paper on our site which shows.
So there you go, a paper. She's calling it a tax loss asset of over $2 billion, which she can take capital gains, future capital gains off of. But man, those are some serious losses. But nonetheless, she kind of finishes up that interview basically talking about how technology is the future, is going to be disruptive innovation that actually is going to win out, and the truth is going to come out eventually, where the traditional benchmarks are going to underperform and innovation funds are going to do much better. So that's going to be the entire update. Let me know your thoughts down in the comment section below. Again, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining us. And let me know what you think about this poll. Is Bitcoin a must-have? What do you think? Yes, in a bank crisis? No, it's too volatile? Or gold as an alternative? Let me know what you think about this poll down in the comment section below. As always, happy investing. I'll see you all in the next video.